On Friday, CPI news that came out was so awful that it changed the bond market's view of the Fed trajectory, and the weakest sector broke. In bond jargon, MBS went no bid, no buyers for MBS.
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. This is just going to be a quick video about a story that came out on Zero Hedge today, although I think it's quite significant because related to Friday's CPI inflation report that continue to show prices are rising at a pretty fast pace and faster than the previous month. And you see here on Zero Hedge, as MBS goes no bid, veteran mortgage broker warns nobody is prepared to deal with inflation. Basically, on Friday, CPI news that came out was so awful that it changed the bond market's view of the Fed trajectory, and the weakest sector broke. In bond jargon, MBS went no bid, no buyers for MBS. Then a few posted prices beyond borrower demand, not wanting to buy except at penalty prices. Overnight, the retail consequence has been a leap from 5.5% to 6% for low fee 30-year fixed rate loans. So again, something that you could have expected as the Fed was raising interest rates. We've talked a lot here about how that was going to impact the mortgage market, the stock market, certainly which we have both seen. And here, now you have that inflation really impacting the market, the no bid. Now, again, that was just one day that we've seen that, but certainly reminiscent of what happened to a lot of those mortgage securities back in 2007, 2008. And here that author is mentioning the other four moments that compared with this: 1979, 1994, and in July of 2007 and July of 2008. Before at Thanksgiving 2008, the credit markets were rescued by Ben Bernanke's genius announcing quantitative easing, buying enough MBS and treasuries to unlock the market in which all had been afraid to buy. So very similar to that. Again, the Fed is meeting this week, expected to do another interest rate increase, quite a move up in the 10-year as well on Friday. So these are some big moves happening, and especially if the Fed is ever going to start undoing its balance sheet, that would certainly not help. And basically, you see his conclusion: in today's US, nobody is prepared to deal with inflation as it has developed in the last 90 days. And even if the Fed raises interest rates to 3%, I'm not sure that that's going to cut it. As you can see here, mortgage demand falls to the lowest level in 22 years amid rising rates and slowing home sales. So the Fed's policy having quite an impact, only up to that 75 basis points to 1% range. And we will see what happens this week. And perhaps just in closing, one of the reasons why I don't expect that inflation is really going to come down significantly is you still have stuff like this coming from the White House. The Biden administration has ordered 500,000 more doses of the Jynneos vaccine for monkeypox, making a big step up in the government's response amid rising cases in the United States and around the world. Again, how is the government going to pay for this? Well, so far the Fed has been printing the money, and they're saying they're going to slow down. And here is the Biden administration ordering 500,000 more monkeypox vaccines. So with all that said, that's why it does not seem like there's going to be an easy end to inflation in sight. Hopefully the gold and silver prices will start responding to that soon. And one last note before closing: I know there's a lot of people in the silver world certainly frustrated, and it's been tough to watch these inflation prints while seeing silver trade so much lower. And I guess perhaps I would be a little bit more concerned if we saw gold down at, $1,200, $1,000, or really losing its value and no central bank demand. Then that would have me a little bit more concerned. But given that gold's still at 1875, Putin using gold to back the ruble, and central banks continuing to buy gold, you add the metals demand as well as the industrial demand for silver, and hopefully we will see good news coming soon. But in either case, just wanted to pass along this quick update with that mortgage news. Hope you're all doing well out there. Not trying to alarm anyone, but it does seem like a lot of the things that we've been talking about for a while are happening now. So Hopefully, this was helpful just going forward. And with that said, I'll look forward to seeing you again tomorrow.